Welcome back to We Are Cosmic, everyone. I hope you're all doing great today. If you're an XRP holder, you might want to pay very close attention because what just happened is not small news. This is not hype, and this is not another rumor floating around crypto Twitter. Ripple has just secured something extremely important, and the impact of this decision goes much deeper than most people realize. Today, we're going to break it down clearly, step by step, in simple terms, so you understand exactly why this matters for XRP and where this could be heading next. Now, listen carefully. Ripple has officially announced that it has secured preliminary approval for an electronic money institution license from Luxembourg's financial regulator, known as the CSSF. On the surface, this might sound boring or technical, but in reality, this is one of the strongest signals of real adoption we've seen in a long time. This is the kind of approval that institutions care about. This is the kind of approval that opens doors, not just conversations. Before we go deeper, do me a quick favor. If you like talking about Ripple, XRP, and the future of finance, type X in the comments section and smash that like button. It really helps the channel reach more people who want real analysis instead of noise. And make sure you stay until the end of this video because the biggest takeaway is not the license itself, it's what this license unlocks. Now let's zoom out for a moment. Ripple is not new to regulation. This company has been building quietly for years while most of the crypto market was focused on hype cycles. According to Ripple's own release, they now hold over 75 licenses and registrations worldwide. They have already processed more than $95 billion in volume, and their payment infrastructure touches around 90% of global daily foreign exchange markets. That's not theory, that's real-world scale. What makes this Luxembourg approval even more powerful is the timing. Just days earlier, Ripple secured an EMI license and crypto asset registration from the UK's Financial Conduct Authority. Now, right after that, we see Luxembourg stepping in with preliminary approval. This sends a very clear message. Major financial regions are not pushing Ripple away. They are welcoming it. And this matters because banks and institutions do not move without regulatory clarity. They don't experiment with trillions of dollars in unregulated systems. They wait for licenses, approvals, and legal certainty. Ripple is checking those boxes one by one across Europe and beyond. Luxembourg itself is not just any country. It is one of the most sophisticated financial hubs in Europe. It is known for being forward-thinking, but also very strict when it comes to compliance. When a regulator like the CSSF gives preliminary approval, it means Ripple has met serious standards. This allows Ripple to scale its digital asset payment infrastructure across the European Union, not as a pilot, but as a production-ready system. This is where XRP comes into the picture. Ripple is not building infrastructure just for fun. XRP is designed to be the liquidity layer that connects traditional banking rails with blockchain-based settlement. As adoption moves from testing to real integration, demand for efficient, neutral, and fast liquidity becomes critical. That's the role XRP is positioned to play. So when you hear headlines like this, don't think short-term price action. Think infrastructure, think regulation, think institutions. This is how real financial shifts happen. Quietly at first, then all at once. Now let's go deeper, because to really understand why this news is so important, you need to understand why Europe matters so much in global finance and why Ripple focusing here is not accidental. Europe is not just another market. Europe is one of the most regulated, most interconnected financial regions in the world. If a payment system works in Europe, it can work almost anywhere. The European Union has been building a clear regulatory framework for digital assets over the last few years. Unlike some regions that talk a lot but move slowly, Europe has been very deliberate. The goal has always been simple: bring digital assets inside the financial system, not push them outside. That's why we now see frameworks that allow banks, payment providers, and institutions to actually use blockchain technology at scale. This is exactly what Ripple is stepping into. When Ripple says it is helping institutions move from pilots to commercial scale, that sentence carries a lot of weight. For years, banks tested blockchain in small sandbox environments. Limited transactions, limited exposure, no real money flow. That phase is ending. Regulators are now saying, if you meet our standards, you can operate at scale. Ripple meeting those standards is the real headline. Luxembourg plays a key role here. It acts as a gateway. Once infrastructure is approved in Luxembourg, it becomes much easier to expand services across the European Union under passporting rules. This means Ripple is positioning itself to serve banks, payment service providers, and institutions across the entire EU, not just one country. And here's where most people miss the bigger picture. Ripple's payment system is not just about sending money faster, it's about bridging legacy finance with digital liquidity. Right now, the global financial system is slow, expensive, and fragmented. Money gets stuck in Nostro and Vostro accounts. Capital sits idle. Transactions take days when they should take seconds. This is the problem Ripple is solving. Ripple's technology already connects to 90% of daily FX markets, and that matters because foreign exchange is the backbone of cross-border payments. Every international transfer touches FX. If you control efficient FX settlement, you control the flow of value. XRP is designed to act as a neutral bridge asset in that system. Now let's talk about scale. Europe's payment infrastructure is massive. The single euro payments area, known as SEPA, covers 36 jurisdictions. This includes 27 EU countries plus the UK, Norway, Switzerland, and several others. As of mid-2025, there are over 3,500 participating financial institutions in SEPA. Thousands of banks are already connected through this system. What Ripple's proof of concept demonstrations show is something extremely important. Banks can connect to blockchain-based liquidity without changing SEPA itself. That's critical. Financial institutions hate disruption. They prefer upgrades that sit on top of existing systems. Ripple's approach allows banks to keep their familiar rails while gaining real-time settlement and liquidity through blockchain. This is how adoption actually happens. No big bank wakes up one day and throws away its infrastructure. Instead, they integrate new layers. Ripple is offering that layer. XRP becomes the liquidity engine underneath. This is also why regulatory approval matters more than partnerships or press releases. A license is permission to operate. It's permission to onboard institutions, process volume, and scale. Ripple now has that permission across major European jurisdictions. And from an XRP holder perspective, this changes the conversation. We're no longer talking about if institutions adopt blockchain payments. We're talking about how fast and at what scale. When volume increases, liquidity demand increases. When liquidity demand increases, assets designed for that purpose become more valuable. Now, this is where we separate noise from reality, because there is a huge misunderstanding in the market about what XRP is actually designed to do. XRP is not meant to compete with Bitcoin as a store of value, and it is not trying to be a smart contract platform like Ethereum. XRP's purpose is much more specific and honestly much more powerful when you understand it. XRP is designed to be liquidity. In traditional banking, cross-border payments rely on pre-funded accounts called Nostro and Vostro accounts. Banks have to park large amounts of money around the world just to make sure payments can settle. That money sits idle. It doesn't earn yield. It doesn't move efficiently. This system is slow, expensive, and outdated, but it exists because there hasn't been a better alternative that regulators trust. Ripple is offering that alternative. With Ripple's payment infrastructure, XRP can be used as a bridge asset. That means a bank can send value from one currency, convert into XRP for a few seconds, and then settle into another currency almost instantly. No pre-funding, no waiting days, no trapped capital. This is not theoretical. This is already being used in corridors around the world. Now connect this back to Europe. Europe handles massive daily payment flows, not just within the EU, but globally. When Ripple secures regulatory approval in places like the UK and Luxembourg, it allows institutions to legally and confidently use this infrastructure. That's the key. Institutions don't care about hype. They care about risk, compliance, and efficiency. Ripple is checking all three. There have already been documented discussions around central banks and XRP integration, including references to how XRP could fit into modern settlement systems. More importantly, we've seen proof of concept demonstrations showing real-time euro settlement using blockchain technology linked to the XRP ledger through the interledger protocol. Let's simplify that. What this means is that euros can move from traditional banking rails, connect through an interoperability layer, and settle on a blockchain in real time. The XRP ledger acts as the settlement layer, while XRP provides liquidity. The bank doesn't need to change SEPA. The payment provider doesn't need to rebuild their system. They just connect. This is exactly how institutions prefer to adopt new technology. Now think about scale again. SEPA has over 3,500 participating institutions, and thousands of those are already set up for instant payments. Even if a small percentage of that volume begins to flow through Ripple's infrastructure, the liquidity requirements grow rapidly. XRP's role becomes more important as volume increases. This is why XRP holders should be paying attention to licenses, not just price charts. Licenses unlock volume. Volume drives liquidity demand. Liquidity demand is where XRP comes in. Another critical point here is neutrality. XRP is not issued by a government. It's not controlled by a single bank. That makes it extremely attractive as a bridge asset between different currencies and jurisdictions. In a global system, neutrality matters. When regulators approve infrastructure that uses XRP, they are not endorsing speculation. They are approving a tool designed to move value efficiently, transparently, and at scale. This is also why Ripple keeps focusing on compliance first. Many crypto projects tried to bypass regulation. Ripple did the opposite. They leaned into it. That approach takes longer, but it creates a much stronger foundation. So when people ask, why would banks use XRP? This is your answer. Not because it's trendy, but because it solves a real expensive problem. When an institution looks at a new technology, the first question is not, how much can we make? The first question is this allowed? The second is it safe? Only after that do they ask, is it better than what we already use? Ripple understands this deeply, and that's why their strategy has been so different from most crypto companies. The preliminary EMI approval in Luxembourg, combined with the UK FCA license, signals that Ripple has passed the hardest part of institutional adoption, regulatory trust. Once regulators approve a framework, institutions can move without fear of future backlash. That's when real money starts flowing. This is why Europe matters so much again. European regulators are not known for being reckless. They are conservative by design. If Ripple is being approved here, it sends a signal globally. Other regions pay attention. Other regulators take notes. This creates a domino effect. Now think about what institutions are dealing with today. Cross-border payments are expensive. Settlement can take days. Reconciliation is messy. Liquidity is locked up all over the world. At the same time, customer expectations are changing. People expect instant payments. Businesses expect real-time settlement. The old system simply cannot keep up. Ripple offers a solution that doesn't require banks to burn everything down and start over. It works with existing infrastructure. This is critical. Institutions don't want disruption. They want evolution. Ripple's technology sits on top of current rails and upgrades them. This is where the phrase from pilot to production becomes very real. Pilots are small tests, limited exposure, no real risk. Production systems handle real volume, real clients, and real money. Regulators approving Ripple's infrastructure means it is being cleared for production use. That's a massive shift. And remember, Ripple has already processed over $95 billion in volume. This isn't a startup with a white paper. This is a company operating at scale in live environments across multiple jurisdictions. Institutions prefer proven systems. Ripple fits that profile. For XRP holders, this phase is very different from past crypto cycles. Previous cycles were driven by speculation, retail hype, and narratives. This phase is driven by infrastructure buildout. It's slower, quieter, and far more powerful in the long run. Price doesn't explode first. Integration happens first. Licenses come first. Volume comes next. Price reacts later. Another important point is that institutions move in networks. One bank adopting a system is interesting. Hundreds or thousands of banks connected through shared payment frameworks is transformational. Europe's banking system is highly interconnected. Once a compliant infrastructure exists, adoption can scale quickly. This is why Ripple's approach looks boring to some people. There's no daily hype, no flashy announcements, just steady progress. But this is exactly how global financial systems are built. And here's the key takeaway. Institutions don't experiment forever. When they find something that works and is approved, they standardize it. That's when volume explodes. None of this news exists in isolation. The Luxembourg EMI approval, the UK FCA license, the growing list of global registrations, and the increasing payment volume are all pieces of the same puzzle. When you connect them, a very clear picture starts to emerge. Ripple is positioning itself as core financial infrastructure. This is not about competing with other crypto projects. This is not about retail hype or social media narratives. This is about becoming the plumbing of the global payment system. And plumbing is invisible until it breaks, but it's absolutely essential. Let's simplify what's happening. Regulators are giving Ripple permission to operate at scale. Banks are being given a compliant way to access blockchain-based payments. Payment service providers can now connect traditional banking rails to digital liquidity without breaking existing systems. XRP sits in the middle as the liquidity tool that makes this all work efficiently. That's the full stack. Now consider timing. Europe is actively pushing forward with digital asset regulation. The UK is clarifying its stance. Institutions are under pressure to modernize payments. At the same time, global trade and cross-border activity continue to grow. Something has to give. The old system is too slow and too expensive for the world we live in now. This is why this phase feels different. In previous crypto cycles, adoption was mostly hypothetical. One day banks might use blockchain. Now we're seeing actual regulatory frameworks, live systems, and real transaction volume. That's a major shift. For XRP holders, the biggest mistake would be to focus only on short-term price movements. Infrastructure adoption doesn't show up immediately on a chart. It shows up in licenses, integrations, and quiet announcements like the one we're discussing today. These are early indicators of long-term change. Another important factor is trust. Financial institutions don't trust quickly. Trust is earned through compliance, transparency, and consistent execution. Ripple has been doing this for years, often while being criticized for moving too slowly. Now we're seeing why that patience mattered. When a system is trusted, it can scale rapidly. Once a few major institutions adopt a compliant infrastructure, others follow. No bank wants to be left behind using slower, more expensive systems when a better option exists. This is also where XRP's design becomes critical again. Liquidity assets become more valuable as usage increases. The more volume that flows through a system, the more demand there is for efficient settlement. XRP's role is directly tied to that activity, and this is not limited to Europe. Europe is simply one of the first major regions to fully lean into regulation. As success is demonstrated, other regions will adapt. This is how global standards are formed. So when you hear people say, nothing is happening, understand that they are looking in the wrong place. The real action is happening in regulatory offices, banking systems, and payment rails, not on price charts. The preliminary EMI approval in Luxembourg is not just another checkbox, it represents access. Access to European institutions, access to regulated payment corridors, access to scale. Combined with the UK FCA license, Ripple is now positioned in two of the most influential financial hubs in Europe. That alone should tell you this is not coincidence. So what should you actually watch next? First, watch for commercial announcements, not partnerships for headlines. The key phrase to listen for is live, production, or commercial rollout. That's when pilots turn into real usage. That's when volume starts to matter. Second, pay attention to payment service providers and banks, not retail apps. When PSPs integrate, they bring entire networks with them. One integration can mean access to hundreds of institutions. That's how scale happens quietly. Third, watch regulatory expansion. Every new license reduces friction. Every new jurisdiction adds credibility. Ripple's growing list of approvals is not random. It's strategic. And finally, understand the role of patience. XRP is not a meme asset. It is not designed for hype-driven cycles. It is designed for utility at scale. Assets like that often frustrate retail investors because progress is slow and invisible. But when adoption reaches a tipping point, the impact can be significant. That doesn't mean guaranteed outcomes. It means clear positioning. Ripple is building where the money actually moves. XRP is positioned where liquidity is needed most. For those of you who are paying attention, this is what early infrastructure phases look like. Quiet, technical, regulated, and deeply misunderstood by the broader market. Before I wrap this up, I want to hear from you. Do you think Europe will lead global crypto regulation? Do you believe XRP will play a real role in institutional payments? Drop your thoughts in the comments below. I read them all. If you found value in this breakdown, make sure to like the video, subscribe to We Are Cosmic, and turn on notifications so you don't miss what's coming next. There's a lot happening in this space, and we'll keep cutting through the noise to bring you clarity. As always, stay informed, stay patient, and I'll see you in the next one.